All right, folks. So it's Cam Hawkins here from the Trading Nut podcast. We're on the YouTube channel here. We've just finished the interview with David Keller, and we're about to head into the little video that he's going to walk us through here, where we're going to go through some stock charts and see how David approaches the market. So, David, welcome to the Trading Nut YouTube channel, and thanks for coming on the podcast just earlier. So, I'm going to hand it over to you, and let's see what you've got for us.
Yeah, Cam, thanks again. And we had a great conversation just now about just decision making and what causes people to make decisions with their positions. And what I wanted to do is just walk you through, we hinted a lot about technical indicators and charts, and I wanted to just talk through some of the examples of what I might be looking at now and how it relates to our discussion. So if you can see the chart of the S&P 500, my general approach, as we discussed, is to keep it very simple. And I think a lot of times as traders, we can overcomplicate. We can make things way too complicated. And you'll notice that all of my charts are relatively simplistic. I like to keep it super straightforward with things that are repeatable and understandable and describable to others. So on the chart of the S&P 500, I'm looking at just a couple of data points. I'm looking at daily price bars. I'm looking at two moving averages, the 50 and 200 day, and then I'm looking at Fibonacci retracements. And I think Fibonacci retracements are really, really interesting, especially right now on the S&P. If you're familiar with it, bottomed out at the beginning of June, rallied to the high in July of 2019, sold off. And if you look how it came back to the 61.8% retracement of that upswing. And as we talked about in the interview, it's not about a particular price level, in my opinion. It's more about a support range or a resistance range. So here we can see that as the price goes below there on a closing basis, we only got below there once, but we traded below intraday a number of times, which is pretty common. So that behavior where we trade below but then close back above support a lot of times, and when we did close below it, we didn't confirm it the next day. We traded back higher. So a lot of times that's what I would look for to establish and then confirm a support level. Now we're at the upper end of that range and close to potentially reclaiming the 50-day moving average. So I think it's really the test for the bullish side of the argument. Do we break above and break to new highs? And if we do, I could see the argument that we would continue a higher return to the previous highs. Based on what I'm seeing, and we'll look at two charts next on two U.S. names as an example, I'm not certain that that's going to happen. But what I would say is that what's interesting about the equity markets, those of you that trade equities, is the good news is there are always stocks making new highs and there are always stocks making new lows, regardless of what the broad market is doing. So one of the regular screens I look for are stocks making new 13-week highs and stocks making new 13-week lows in the U.S. I do that in a number of places, and I'm showing you on stockcharts.com how I do that. But I like to look for stocks that are breaking out, stocks that are breaking down to a new level. A lot of times that tells you where institutions might be moving their money to. And two names I think that are interesting to pay attention to here at the beginning of September. One is Kellogg, which is a staple stock in the U.S., makes breakfast cereals, things like that. It has this traditional transition between a distributive pattern where we're making the lower lows, a consolidation pattern where we've hit an equilibrium, and then an accumulation pattern where we're breaking to new highs. The stock's now rotated above resistance, gapped up on earnings, and then sort of came back and tested the lower end of that or the end of that gap, and now has continued higher to right at that point where it's potentially breaking to new highs. But that transition, I like to see that, and I like to look for when it's continuing to make higher lows during that ride higher. So I think it's a chart that sets up with an interesting short-term pattern that lines up with an interesting long-term pattern. And then the last one I would show is Snap. And this is a U.S. stock that I would characterize as sort of the fat pitch chart. And those of you that are familiar with baseball will understand what that means. Fat pitch is essentially something right in the middle of the plate. You have to take a swing at it because it's so compelling. It's just that perfect combination of the right place at the right time. Yeah. And for me, a fat pitch chart is a strong long-term trend, a weak short-term trend. So something that's been trending up, which Snap has, but in the short term, it's pulled back to the 50-day moving average. And if I have a portfolio of that type of chart, I feel pretty good that I'm accumulating at a weaker point in the cycle, but in a long-term trend of higher highs and higher lows, setting up pretty well. So between those three charts, the chart of the S&P 500 testing resistance, chart of Kellogg, rotating to more of an accumulation phase, something like Snap that's had a strong long-term trend but a weaker short-term trend. Those are the types of charts that tend to be compelling, tend to follow my radar.
Brilliant. Well, look, that's some nice analysis there, David. Guys, if you do want to hear also how David sort of broke down Bitcoin as well, so we talked about that in the podcast, head over there to tradingnut.com. There should be a link on YouTube under the video. And David, before we wrap up, what's the best way for the guys to get hold of you? Where can they find information about you and Sierra Alpha?
Yeah, thanks so much, Cam. So I'm on YouTube as well. I have a channel called Market Misbehavior. I'd encourage people to check it out. A lot of quick videos unpacking some of the decision-making challenges that Cam and I talked about in our previous conversation. So yeah, I'd love to have people check us out there.
Cool, brilliant. Go and check that out, guys. We'll hook that up in the show notes as well. So thank you very much again, David. Guys, if you do want to listen to the podcast, which went for about 45, 50 minutes, we broke down a lot of stuff. We talked about manipulation. We talked about cryptocurrency. We talked about what went on at a currency trading desk back in the day. Some quite a funny story there on the charts. Guys, go and check it out on the Trading Nut podcast. All right, until next time, I wish you a great trading week, and I'll see you in the markets.